I'm delighted to be joined today on Crypto RFQ by David Olsson, Managing Director of Europe and Asia at BlockFi. Hey, David.
Hi, Teana. How are you?
I'm great. Thanks for joining us today.
Thank you.
So we're going to talk a little bit about the futures impact on the lending market today. So, David, tell us a little bit about why lenders are looking at the futures markets.
Sure. So it's about opportunity costs. So lenders have a choice between putting their funds to work with their clients who might be borrowing USD against Bitcoin collateral or other types of collateral so they can leverage their positions. Then you have obviously the futures market where the futures may trade at a premium to spot, and entering into a cash and carry trade, which has been in the press a lot, is a way for investors to realize a fixed yield if they hold the future to expiration.
So, David, what's the futures premium? Some fundamental investors might not completely understand the mechanics. So could you explain this a little bit more?
Sure. So a future is a contract where an investor agrees to buy or sell an asset at an agreed point in time in the future. The basis is the difference between the future price and the spot price. And the basis is said to trade at a premium when the basis is positive, when futures are trading above spot, or at a discount when the futures are trading negative to the spot price.
Okay, so what drives the futures into a premium or discount position?
So it's about supply and demand and the structural features of the market. So onshore in the US, you have certain investors that cannot touch Bitcoin or physical Bitcoin for one reason or another. Mm-hmm. They have to gain exposure to Bitcoin either through a fund or through futures on a regulated exchange like CME or backed. Right. So in that case, demand outstrips supply. As you have these institutional investors who come on primarily to go long. Mm-hmm. Then you have overseas speculators who are predominantly retail investors who look to futures exchanges to predominantly get long exposure as well to Bitcoin. And market makers may not be as willing to provide inventory, thus there's upward pressure on the price of the futures above spot. And those retail investors are looking obviously to get leverage as they bet on the performance of Bitcoin.
Okay, so how does this impact the lending markets? Why are lenders interested about this? Why do they care?
Sure. So the primary, again, it comes back to the cash and carry, a bit of the cash and carry trade and optionality that lenders might have in lending to their clients in the borrowing and lending market, the secured borrowing and lending market, or trading the futures curve and realizing carry if they hold futures to expiration. So if you look at what happens when the premium spikes, and if you can see that recently, for example, on August 18th, some very interesting price action, you saw Bitcoin move through 12,000. Right. And you can see from the chart that the price or the premium on the CME moved to almost 20%. Then a couple of days later, as the price of Bitcoin came back down below 12,000, you see the premium contract to about 8%. Mm-hmm. So that demand and that fundamental kind of supply demand aspect that I spoke about before has this impact on the premium. Lenders can then say, okay, I can sell futures short. I can realize that premium by holding them to expiration, buy Bitcoin spot so that I'm market neutral, so I have no market risk, and realize that yield. If that's greater than where they can earn a yield by lending to their clients, that might be a more attractive opportunity, and thus supply comes out of the borrowing and lending market, moves on to the futures exchanges, and the traders who are looking to borrow then have less supply, and the price of borrowing moves, those funds moves up. Conversely, the pendulum can swing back the other way, where as lenders short futures, the premium comes in, and then collapses to a point where actually it's more attractive again to deploy funds into the borrowing and lending market. So that's the dynamic that lenders face, and things can swing about pretty quickly, as you can see. From this chart, if you look back from March to August, this tracking the CME premium and discount. You can see March 12th and 13th, the premium collapsed, or the basis collapsed and went from premium to discount, severely negative. And then as Bitcoin marched higher up until recently, the futures just steadily increased their premium.
Okay. So, last question, what happens when, Bitcoin decides to stable off again and not do anything for another couple of months like it did at the beginning of the year? How does this impact what's happening in the futures and lending market?
Yeah. Yeah, I think so. Then you might see volatility. You will see volatility come down. You might see premium sort of slowly dissipate as speculators overseas get less excited, use less leverage,
Yeah.
and even long only investors in the U.S. May look to deploy into other assets like equities. But as you know very well, Teana, that anything can happen at any time in our market. So
Very true.
I'll leave it there.
Brilliant. Thanks so much for joining us today. It's a pleasure to have you.
Thank you for having me.